Let's pull up some slides. Let's talk about the week. There is a new sheriff in town, and his name is not Reggie Hammond. Let's move to the first slide. He doesn't look like Reggie Hammond at all, neither. Equity indices were extremely higher, obviously, since election night, since Trump won. Best post-election day in history. Got a slide on that in a second. JPMorgan and Goldman and other banks, they just really took off. That was one of the things that you noticed on Wednesday after the election. They pulled back a little bit yesterday, but big move on Wednesday, surging on this idea of hope to reduce taxes and reduce regulation as well. Post-election, look, we had a huge move in the dollar, had the biggest day gain since February 2023. Currently flat on the week. We'll see what ends up today. And then gold had its worst day since June on Wednesday as well, Tuesday/Wednesday. I tweeted about it. Tony, retweeted it for me. One of the best trading nights in a while. It was just crazy on Tuesday night through Wednesday. After we've just been sitting around, not a whole lot's been happening. It was the beginning
Tuesday night was not the best trading night. I bought bonds and they kept going lower, and I kept buying bonds and they kept going lower. That was not a fun night. There was no two-sided action.
That's true. But at the same time, when you see that type of movement so crazily on one night, don't you kind of feel like, okay, this is ridiculous and it's going to sort of bounce?
I did, but it didn't until
it did. Yes, it did on Wednesday.
Yeah. The bonds definitely bounced. The stock market though has had no pullback.
Yeah, no, it hasn't. It hasn't. Speaking of bonds, 10-year note is trading at a 4-month high due to a higher expected inflation under the new administration. We'll see what happens there, which is kind of crazy to me. That's a whole nother, the narratives are flying, as you would imagine. Fed cut rates amidst all of this. Fed cut rates 25 basis point for the second straight meeting as expected. And the crazy thing about that is for the last 3+ weeks, we were looking at vol, right? And the November election expiration on the 5th, and we were looking at vol for the November 7th, and vol for the 7th was way higher. So we were expecting probably more movement for yesterday. And it was basically like kind of a nothing burger. So that was the crazy thing about that. VIX stumbled for the most since August, falling below 15, and VVIX closed below 100 for the first time since mid-July. All the vol has been sucked out of the market. Let's move to the next slide. Like I said, huge contraction. This is the last couple of weeks of vol curves. Going back to October 16th, you can see we're basically hanging out in the same area for the week of October 16th, for the week of the 23rd, week of the 30th. This week, boom, back to basically, God, I'm blanking on the word, not backwardation, but contango. I hadn't seen it in so long, I forgot what it looked like. I forgot the name. But we're basically back to contango now when you look at this vol curve more recently.
Yep, good point.
Like I said, so this is election years. This is the moves. Over time, you can see 1932 big move to the downside, 1948 big move to the downside. But yeah, the last 3 years markets have been up, and this was the best day ever when you look at S&P 500, 2.5%. Dow was up 3.6%, Nasdaq 2.8, kind of lagging, if you will, compared to some of the others. Russell obviously was the big winner, up 5.8%. Russell sitting around 2,400 now. Craziness. Just craziness.
It was a day, that's for sure.
Yeah, and has continued. And the way it feels this morning, who knows? It might continue a little bit more. Let's move to the next slide. So the sector rotation is the thing I think that's people are paying attention to. It could get a little interesting. So far, what we've seen, financials leading the way. You got consumer discretionary, mostly in the form of Tesla, right? And names like that. For those who always forget, I always talk about consumer discretionary is the things you want, you don't necessarily need. Communication, I feel like Google is in that crowd. XLK, obviously tech has moved up. Energy moved up. What didn't necessarily move up, healthcare to some degree. Even though there were some healthcare names moving, I felt like some of the managed care names like Humana, et cetera, were moving, but didn't explode. That sector did not. And consumer staples was kind of down. Also utilities. So surprising in a way. Well, I guess not surprising, because honestly, when interest rates are a little bit higher, you'll see some of those last 3 names kind of falter. And I guess that's what happened. We just didn't expect interest rates to explode like that and bonds to fall. Big picture looking out, SLV and gold pulled back. You can see obviously Qs, SPYs, IWM, and diamonds in the form of Dow. They all went up. And then, of course, there's the bonds. When does it stop for bonds? That's the answer I need from you guys right now. When does it stop?
It looked like it stopped. I think it might have stopped.
Praying it stopped.
I'm hoping we sold a bunch out yesterday, last night, this morning, but I'm still really low on bonds. I want him to get up into the 118 handle.
Yes, he does. You're
yeah,
there. You're getting close.
Barring anything crazy, I mean, this is kind of how the year's going to end up, right? Like, equities up, 20% or so, and gold and silver somehow up, that much as well, and then there's lowly bonds that are going to end the year in the red, which is, is this like the third year in a row in the red for bonds? Maybe. Might be.
I don't know.
It's interesting. Yeah, Trump has embraced digital assets, and Bitcoin followed suit, touching all-time high of 77K. You saw the Bank of England lowered borrowing costs 25 basis points as well to 4.75%. So we really are in this rate cutting cycle now across the globe. After last week's 54% range in trading, DJT experienced a 58% range in trading, but for the most part, it's been sell the news. Stock is down a pretty decent amount. They say China is preparing for a second trade war with the U.S., and so they're also preparing for a second round of stimulus. We saw what the stimulus did a couple of weeks back, maybe a month back. Those Chinese stocks took off. I don't know if that's going to happen again, but again, they're preparing for it. So for this coming week, we got CPI on Wednesday. I don't even know if these inflation reports matter as much anymore, but you got CPI coming out on Wednesday. You got PPI on Thursday, and you got retail sales on Friday. And then as far as research this week, the market measure, how do earnings drive stock movements? It was a really interesting one. Check that out.
A lot of those Chinese stocks have earnings coming at the end or middle of November, like Baidu has it November 21st. Baidu down about $3 this morning after catching a bid yesterday of $3. So watch yourself there. You might get a little bit. IB rank of 71, pretty high also. So you might get some play in those Chinese stocks.